All right, so I just wanted to go over some of the recent trades that I've done, recent market action, and to help you kind of adapt to what is changing in the stock market. Because there has been a change over the past few days. I'm not sure if you noticed, I brought it up a few times in the chat room. It exists, and it would be wrong of you to ignore that. But before I do that, first I gotta give a shout out to my long-term newsletter. This was a video I sent out on April 6th. So what is this? Roughly 2 months ago, and I said an unknown stock with potentially big upcoming news. And so this was OHGi. I want to talk about one of my small cap millionaire positions. It is OHGi. Here's a 100-day chart. It has done pretty much nothing. It has had one big spike from basically 160 all the way up to the 380s, come right back down. Here we are at 173. That's pretty much my average. I'm in a little over 10,000 shares. I've been adding in the 180s, 160s, 150s, 170s, and it's not an exact science. It's all about a waiting game. As I said in the beginning, my first alert, they just issued or announced this new product, which I can't pronounce, but it's a Chinese app where you have sponsored telephone calls, where someone can get a free phone call if they listen to a little ad beforehand. You see that if you watch a YouTube video, you have an ad. If you watch TV, you have ads. Now even in movie theaters, you have ads. This is a very simple product, but no one has ever really done it with phone calls before. And I think with China's booming population and a lot of them not being able to afford more expensive phone calls, I think this could be huge. Thinking a product can be huge is one thing. Can they actually make it work? So I bought this back in February, so it's been several months since I've held it. This was when they announced the app, and it skyrocketed. Now the question is, can it skyrocket again, or is this app just going to fade into oblivion? There are signs that the app is doing very well. If you look at their earnings press release. So then I go into detailing, why the app was doing well. This was OHGi 2 months ago. This is OHGi today. It is up to over 5.5. So coulda, woulda, shoulda made 40 grand on my position. I did not have the patience to hold. I don't want you to think that I did. You can see here, right before it started spiking, it had this weird gap down with no news. And my rule number one is to cut losses quickly. So I cut losses here, and I lost 5 or 6 grand. It was actually one of my biggest long-term losses. But I take away a lot from this trade, because even though I cut losses, I was actually right. And if you watch that whole video, I guess I'll make it free so that you can see my research process so you can learn from it. I was right that they would have follow-up news about the app, and that follow-up news would spike the stock. Not once, not twice, but now 3 times. And this little stupid app that has been downloaded probably in excess of 4 or 5 million times now. Last time they announced it was 3.5, and the time before that it was 3 million. So it's growing. But this kind of app that competes with WhatsApp and Skype, this is the single hottest penny stock. And it is not random that I picked it. I might have mistimed it. I might not have personal trading profits. But the beautiful thing about my long-term newsletter is that, most people have learned to ignore my sell alerts. Frankly, that's what it comes down to. Even you short-term newsletter subscribers have learned to ignore my sell alerts. I'm not the best timer, but I guarantee you that I am the best at being on the right track. And I'm glad that several students in the past few days have emailed me and messaged me. I'll post them when I have a chance. Some people are still holding it, but they're up between 10, 20, and one guy is up 45,000 on his position. And I don't know how high this goes, but I am very proud to have brought it to people's attention. And a lot of people say, Tim, only focus on, stocks trading 2, 3, 4, 5 million shares a day. Otherwise, you're a pumper. Listen, I spotted this company. I spotted the app. The stock had already spiked. I'm not claiming that I found it before this spike, but I held it for several months. And sometimes with low volume stocks, especially when they have a catalyst, if you watch that video, which I'll post later, you will see that they were hinting in the press release. They said that, where is it? Let me just show you. In this press release, I have to play this video again. Which was on April 1st. They basically said, blah, 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 we're working with big companies. We've negotiated with some tier 2 customers. to a revenue share where the company receives a percentage of all future revenue. In the medium to long term, this is expected to generate greater recurring income. So that means basically not short term. So that's
Scroll down. Hurry up, Sykes.
And then they also say that this is really cool. So they have proven and validated our technology by signing up Tier 1.
Okay, I'm tired of listening to myself. This is a 10-minute video. But down here in the press release, it says, where is it? We are very excited about the rollout since we have direct control of marketing efforts. I'm excited to report that we have seen considerable traction and will be reporting on key stats shortly. So this was in early April, and they followed up and they did report on those key stats shortly. So even if you're following a low volume stock, if they have an upcoming catalyst, especially in a sector, the single hottest sector with WhatsApp and Skype and Line, you know, the messaging sector, you got to consider these as potential trades. And trust me, I'm looking for more stocks like it. You don't find stocks in the ones that have the potential to spike up to the 5s in a few weeks like this. And I bought it several times here. You know, I actually nailed this spike in the 170s, if you remember, but I sold in the 2s. I underestimated it. And then I dip bought it in here in the 3s, and I underestimated it again. So I've underestimated it. I don't know how many times anymore, but I was on the right track. And the reason why I say that is not just to brag, like, look at this amazing pick. Everybody join my Small Cap Millionaire newsletter. Okay, maybe you can join my Small Cap newsletter, but, you know, I'm not going to time things perfectly ever, probably. More importantly, being on the right track is very, 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 very important. So take, for example, this morning, CJJD. So this was an earnings winner. You can see clear uptrend, and it actually broke this nice high of 420 up to 460. I didn't want to buy on this initial spike, and it's scary to buy on that spike, but I did start buying it in here on the dip in the 390s, and I thought that it could spike back to 410, 420, 430, maybe even 440. As it turned out, you know, the dip was a lot longer to the 360s, and now it's bouncing a little bit, but, you know, this is not good price action to buy into. But I will always look to dip buy earnings winners, because that is being on the right track. Some of you guys shorted it, and you shorted it like at 410 and 4 and 390. And when it went to like 380 and like 370, you're like, haha, Sykes, you shouldn't buy this stuff. You're an idiot. You know, you should short this. And what you don't understand, and you know, people don't understand this until it's too late, which is the sad reality. When you're making 5, 10, 15 cents on your shorts and saying, haha, Sykes bought it in the 390s and sold in the 390s, I made more than him, you're taking the wrong approach. Because if you were wrong, and trust me, you will be wrong more times than not shorting earnings winners. And when you are wrong, the stock, maybe not this one, maybe not this time, but if it does bounce, it will go from 4 back to 420 or 430 or 440 quicker than you can cover. So while you have made 10 or 15 cents a share on your shorts, you are taking the wrong approach and risking far more than you understand. And you're judging your approach based on how the trade comes out for you. And that's not the right way. You know, even though I lost money on OSGi initially, and I made it back with my other buys and dip buys, but even though I didn't, you know, execute my long-term trade well, my research process was dead on. My prediction was dead on. And I take away from that for future trades so that I can say, you know what, I'm going to research exactly like this so that I find the next OSGi, and I'm going to do the exact same thing, and whether or not I execute, I will be on the right track. And there is so much to be said for being on the right track. Everybody just judges based on, you know, executions and how a trade turns out, and you're only as good as your last trade. Bullshit. You're only as good as the approach you take. And if your approach is right, your last trade doesn't matter, because you might screw up. You might have missed your last trade. But if you're on the right track, buying earnings winners, dip buying earnings winners, buying stocks like OSGi before they spike 500%, more times than not, you will win. And that is how you grow your account. If you don't believe me, if you want to short earnings winners, and if you want to short stocks like OSGi or PBMD, which wiped out too many traders from other chat rooms and newsletters, totally wiping them out, losing 30, 40, 50, 60, 70, 80, 90% of their assets in one trade, do not say that I did not warn you, because this is your warning.
The stuff that I teach might not always work out. In fact, lately, I've been trying to buy morning spikes and they all suck. It happens. I will still dip buy and I will still try for morning spikes. I will adapt. I'll tell you, CJJD, when the fact that it couldn't really spike here despite the huge volume, that means that the next time I see something like this, I'm going to trade with a smaller position size because the market is telling me, hey, this strategy isn't working right now. MOBL, remember I had this one overnight because it was spiking quite nicely. I'm glad I sold roughly 3/4 of my position here in the mid 630s, just because I didn't like how long it was taking to spike, and I'm glad I played it safe. Today I had to cut losses. It's come back a little bit, but this is a failed morning spike. What I'm going to take away from this, does that mean I'm not going to buy the next small company that partners with Google? Hell no. I will do this trade over and over and over again. I might sell all my position into the close and not wait for, a potential morning spike the next day if the market tells me what it's been telling me lately. Or, I might take a smaller position. So I will adapt, but I will never stop buying earnings winners and contract winners and, stocks with catalysts. AXN, a lot of you guys did very well. I had a chance to buy it in here in the 270s right before the close, and I didn't do it because they were having a press release the next day and a presentation. And, it turned out that they bombed the presentation, but buying it in here in the 270s, you could have made $1 a share before it actually crashed. And a lot of you guys nailed that. Even though I didn't nail it, you guys were on the right track. I had the chance to make the trade. I decided to wuss out. So I will miss trades left and right. And I will sometimes play it well, like I did selling half of MOBL. And sometimes I will play it terribly, like selling OHGi. Probably I shouldn't have sold all of OHGi. I probably should have sold half. But I get freaked out when a stock gaps down for no reason, especially when it's a speculative penny stock. So I will learn from my OHGi mistake. Next time I have a long-term position, a small cap millionaire newsletter position, that has potential based on, some upcoming news, I'll probably only sell half or maybe sell 3/4 of my position. You don't have to go all in or all out. There are ways to, take smaller positions and you adapt based on how recent trades have done. But the fact that I was literally the only person who spotted, literally the only one. I mean, there's a lot of penny stock newsletters. There's a lot of traders. I was the only one who was watching it for these months. It was not doing anything. And, it had already spiked, so I wasn't like the one, I'm not like Christopher Columbus or Amerigo Vespucci to discover this. It had already spiked, but I remembered it. And I knew that the news and, when the news did come out that it would have potential. So I take very much away from this. And I'm damn proud of my long-term newsletter subscribers who are still holding. I might even buy it again in the short term. It's scary that it's up so much, but if they have more news, it can spike more. But failed trades like my trade this morning on CJJD, I cut the loss. MOBL, I might have made like 2 cents. I don't care. I don't differentiate between making 2 or 5 cents or losing 2 or 5 cents. It's a scratch. I was wrong. It did not spike. MOBL spiked a little yesterday, but I was wrong holding it overnight. CJJD, it spiked 7 cents a share. It did get over 4 for like a few seconds, but then it went right back down. And now it's 30 cents below from where I thought that, it could spike. So I was wrong on that one. What was the other one I was wrong on the other day? I don't know. I can't even remember. The one that I think I would have been really dead on right, but I'm not even going to brag about is NUGN. I said going into this week, this is a potential short. And in last night's watch list, I said NUGN looks to be the next great short. And sure enough, today it's down 40%. I do have to give props to a few challenge students. I believe 3 or 4 of them. G. LeBlue, Lurch the Perch, one other guy, I forget his name, and 2 other guys. There's 4 people total who found shares to short of NUGN. Interactive Brokers had shares to short, and they've been holding it for a few days in the high 3s and mid 4s. And it's just a waiting game. Once this stock starts to get kind of crazy, it's usually the beginning of the end. And now everyone is sitting on $1 or $1.50. Oh, Jerome, he tweeted me. He was short at 441. So he nailed the top exactly, and he's up nearly $2. So there are some shorts. But again, even though I didn't execute, I will take away that I was on the dead on right track about this being a potential short. I couldn't find any shares to short. Most people couldn't find any shares to short. That doesn't take away from the fact that this drop was predictable. And the fact that this stock was predictable and this drop was predictable means that the next pump and dump is going to be predictable. And you better have the right broker. Lately, Interactive Brokers and E-Trade have been my top two brokers with shares to short. So, you know, everything is kind of a sliding scale. When one broker doesn't have shares to short, it's okay to move some assets into another broker that has been doing better lately. E-Trade, I have ripped on for years. And now, you know, I opened up a $30,000 account. Now my account is nearly $90,000 in, 4 months. I've nearly tripled my account. I'll do a whole video lesson on how I tripled it, you know, trade by trade when I hit 90,000. I think I'm at like 85,000. But, you know, E-Trade is a broker that I've ripped on for so long, and now they've become my favorite broker. So don't get married to stocks. Don't feel like you have to execute perfectly. This game is all about learning lessons from your recent trades, seeing how the market is changing. Namely, morning spikes have been failing the past few days, and you know you're going to have to probably learn a little bit more about short selling in the coming few weeks and months. And you know you do the best you can, but do not try and judge a strategy based on, you know, 1 or 2 or even 3 or 5 trades. The way that I judge these strategies, I mean, I've done thousands of trades with every single pattern, and I've really isolated the best patterns that have performed the best. And I only change it, you know, I might be a little less aggressive, I might take smaller positions, but far and away, you know, OHGi proves it and NUGN proves it. You know, it's not random when I'm picking these stocks that can shoot up 500%, and it's not random when I'm, you know, picking the stock that's going to be the best short and it drops 40%. It's not a self-fulfilling prophecy because I mistimed OHGi and I didn't even trade NUGN. So whether I made these calls or not, they would have happened. But I take a lot away from it, the fact that, you know, I was on the right track on both of them. In my mind, that is a win. And when you can be on the right track again and again and again, sometimes you will execute. Sometimes there will be shares to short of NUGN. Sometimes OHGi won't do a weird ass dip before it spikes 500%. So I will keep doing exactly what I've been doing because I am on the right track. If you want to bet against me, I welcome it. There are a lot of people who think I'm full of shit. Go ahead. Short earnings winners. Don't pay attention to my warnings. Don't heed my warnings. You know, try and dip by these pump and dumps when they're crashing and see how you do. Inevitably, people find that what I teach actually works because what I've been doing is teaching everything that has worked for me for over 15 years. Shit doesn't change overnight. These patterns work again and again and again, roughly 3/4 of the time, which is my winning percentage. So whether I'm traveling, whether I'm sleeping in, whether I just get, you know, antsy, whether I cut losses, and you know I would cut losses again on OHGi. My mistake was not getting back in. If you make a mistake on a trade, it's okay. It's not the end of the world. You don't have to be perfect. But to be rich, you really should be on the right track. I don't know how many more times I can say on the right track. It's turning into a drinking game. Every time I say be on the right track, you need to take a shot. By the end of this video, you're trashed. But you know, congrats to several of you challenge students who found NUGN in your banking 10, 20, 30, 40%. Congrats to my long-term newsletters subscribers, small cap millionaire subscribers who are making 100, 200, 300, 400% on OHGi. All of you guys have done better than me, and that makes my day. This is not a competition to see who can be the best trader. This is a competition to see who can learn the most, learn the quickest, and increase your wealth the most over time. 1, 2 trades, 1 month, 2 months. This is just little blips in your whole journey as a trader. And you have to really look at it like a journey. I know many of you, you know, you lose and you're disheartened. Your confidence level goes down. You lose on 3 trades. You're like, oh my God, it's the end of the world. Nothing is the end of the world unless you blow up. And rule number 1 for me is to cut losses quickly. I'm very proud of the fact that while many people make fun of how cowardly and safely I trade, no one has ever blown up following my rules. And there's a lot to be said for that. If you follow other people's rules and you're a gunslinger, you'll have more action, you'll have more ups and downs, it'll be more exciting, you'll have more adrenaline, but you might also blow up and lose everything. So that's my warning, that's my video for today. I will see you guys in the chat room. Remember, you do not have to trade. Okay, NUGN was a great short setup, but most people don't have shares to short. If you can't find shares to short, say no borrow, no cry. Thank you.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.